Buying a home is something many South Africans aspire to. It is the biggest single transaction most of us will make in our lifetime. Yet how much do we really understand about the process? Over the next 6 weeks, City Press, in partnership with Capitec, will take you through the journey of buying a home by following the story of first-time homeowner Bontle. Before Bontle started looking for her dream home, she applied for a pre-approved mortgage. While the bank would still need to approve the final mortgage based on the actual property, it gave Bontle a sense of the amount she qualified for, the interest rate she would be charged, and what it would cost her in monthly installments. For any potential home buyer, this is a helpful exercise to get feedback on whether your credit score is good enough and whether you meet the affordability requirements. Whilst most people worry about their credit scores, according to Capitec, one of the main reasons for turning down home loan applications is affordability. You must be able to afford the repayments. The affordability could also affect the interest rate that the bank is prepared to offer. There are several ways to improve your affordability. Pay off short-term debt. This will free up cash flow to put towards your mortgage repayments. If you are overcommitted on car finance, it may make sense to focus on paying off the car as quickly as possible and then applying for home finance. Build up a deposit. While banks do offer 100% mortgages, in some cases a bank may require a deposit. And even if you qualified for a 100% mortgage, a deposit reduces the amount you need to borrow and therefore your monthly installments. It also shows the bank that you have the ability and discipline to save, as the bank will have less risk exposure and you may even qualify for a better interest rate. Include any additional income. Capitec will consider additional streams of income, such as a side business, in terms of affordability. So even if you're earning a few £1,000 from a side hustle, make sure that you include that in your application. And finally, your rent counts. If you are paying rent, the bank will take into account that the rent will be freed up to pay towards the mortgage. Having paid rent timeously each month will also reflect on your bank statement and could actually improve your credit risk. Your credit score matters. If you have legal action against you or a poor credit score due to the non-payment of loans, the bank may decline your application. Even if your application is approved, your credit score can impact the interest rate that you would be charged. So someone with a good credit score may qualify for a better interest rate. It usually takes around 6 months for your credit score to reflect an improvement if you take the following steps. You can improve your credit score by ensuring the payments on all of your loans are up to date. If you have multiple unsecured loans, such as store cards, making these paid up and closing them could also have a positive impact on your credit score. If you are looking to create a credit history, you could take out a credit card, but set the limit low, so for example R2,000 a month, and make sure you pay in full at the end of the month. Financial commitments like payments to policies and insurance premiums all count towards your credit score. If you are turned down or the interest rate charged is well above prime, you may want to delay buying a home and focus on improving your credit score and affordability. The interest rate you are charged is dependent on your affordability and credit score. However, the type of property and other financial commitments could also have an impact. Interest rates reflect the risk premium the bank places on the mortgage, and it can be influenced by various factors. A primary property, in other words your home, will usually have a lower interest rate than an investment property. Banks know that people are most likely to prioritize their home repayments, and therefore it carries a lower risk. The lower the mortgage relative to the value of the property, the lower the risk to the bank. Therefore, putting down a deposit could improve the risk profile and therefore interest rate of the loan. If you are thinking about buying a home, ask for a pre-approved mortgage. The Capitec online application process takes less than 5 minutes, there's no cost, and it gives you a good idea as to whether or not you are ready to become a homeowner.